Technical Analysis Part 3, Trading. In this tutorial we will be focusing on when to buy the stock, where to place the target and where to set the stop loss. Before one plans to trade, it is necessary to note down two supports and two resistances of the stock. As we move on with this tutorial, the need of noting it will be understood. Next, when should one buy the stock? The stock can be bought or long positions can be initiated after the stock moves above its first resistance with good volume. Let's see an example which will help us to understand this concept better. In this example, we have the stock chart of BHEL. For BHEL, 200 is the initial resistance. Therefore any move above 200, with good volume, is a good buying opportunity. Then, when should one sell the stock? The stock can be sold or short positions can be initiated after the stock moves below its first support with good volume. Here is an example. In this stock chart of JP Associates, 70 has proven to be a very strong support for the stock. Any move below 70, with good volumes, is a good opportunity to initiate short positions. Next, where should one place the target when the stock is bought? If the stock is bought after it breaks above its first resistance, then the target can be placed near the second resistance. Let's see an example. In this chart of HUL, the first resistance for the stock is around 640 and the second resistance for the stock is around 680. Therefore when the stock breaks the first resistance of 640, then one can buy the stock with the target placed near the second resistance, which is around 680. Similarly, where should one place the target when the stock is sold? If the stock is sold after it breaks below its first support, then the target can be placed near the second support. Let's see an example. In this example of JP Associates, the first support is around 70 and the second support is around 60. Therefore when the stock breaks the first support of 70, then the stock can be sold with a target placed near the second support, which is 60. Next, what are stop losses? Stop losses are precautions taken to prevent huge losses. Placing stop loss is the most important while trading. What is the need to place stop losses? In case if one takes position in a stock, the stock need not always reach the target. There are chances that the stock may slip below the purchase price. And one will have to wait till the stock moves above the purchase price in order to exit the position with the profit. Since there is no point in waiting for an indefinite period of time for the stock to go above the purchase price, it is wise to exit the position taking a small loss. If one initiates long positions and then if the stock fails to reach the target and if it breaks below its support, then the stock will be going down further. So to prevent such huge losses, it is necessary to place a stop loss. When the stock is bought after it crosses the first resistance, the stop loss can be placed near the first support. When the stock is sold after it breaks below the first support, the stop loss can be placed near the first resistance. Here is an example. In this stock chart of BHEL, the first resistance is at 200. After the stock breaks the resistance of 200, one can buy the stock with the stop loss placed near the first support, which is at 180. So, let's cover the entire chapter in a nutshell. In this chart of BHEL, the first resistance is around 200. The second resistance is around 240, the first support is around 180 and the second support is around 160. One can buy the stock after it trades above the first resistance, which is 200. After long positions are initiated, the target can be placed near the second resistance, which is at 240, and the stop loss can be placed at the first support, which is around 180. For intraday trading, support and resistances obtained from daily charts is better rather than obtaining it from monthly charts or weekly charts. Here we come to the end of this series of tutorial on technical analysis. Please like and subscribe. Thank you.